Joining us this morning, Edward Jones senior investment strategist Mona Mahajan joins us. Mona, what an interesting day when you got this reversal on small caps relative to the S&P. Obviously, you can point to why it may be happening. Do you think it lasts?
Yeah, it's a great call out, Carl. And look, we were happy with what we saw in the CPI report this morning. We got not only headline inflation moving lower, we got that notable move or trend lower in the shelter and rent component of CPI, which is what we've been waiting for. So core CPI looks poised to continue to trend lower over time as well. So a good reading there. What we're also seeing, aside from the inflation readings moving lower, is the broader economy starting to show signs of softening as well. And, Jerome Powell and the Fed have referenced this as well. We're seeing a cooling labor market. Services, PMI dipped into contraction, GDP now at about 2%. So cooling, not a collapsing. What we think broadly is this backdrop still supports an environment where the earnings growers will probably do best. So probably still that mega cap technology growth part of the market continues to show some leadership here. While we may get days like this where we get a reversal in small caps and perhaps some broadening in participation, we think that won't be really sustainable until we get a Fed that is really starting to cut rates, and that sparks perhaps a reacceleration in the consumer and growth as well. So
right.
A mix.
So to that end, we still got to chop our way through PPI. There are some who are saying don't be too rose-colored glasses on this one because PCE does look at housing a little differently. Is there a reason to think maybe this is not as good as it looks?
Yeah, it's a fair point. Look, PCE is not as heavily weighted on shelter and rent, so we won't get that benefit as much. It's more heavily weighted on PPI components, which we'll get tomorrow. But broadly, we're also seeing the same trend in PCE inflation, which is the Fed's preferred metric. In fact, we're already sub 3% there, closer to 2.6%. On its way, we think, bumpy path lower to 2%. So we do think PPI trends will be important tomorrow. But I think the broader message of a cooling economy will generally lead to softer consumption, which leads to lower prices. And we saw a little bit of that in the wage gains figure in the jobs report this month as well, which finally ticked below 4%, 3.9%. So, softening wages, softening consumption. I think the Fed wants to see that. We're seeing it in the markets as well. Not only are Treasury yields kind of plummeting today, we're also seeing the probability of that September rate hike up to about 80% or so. So we think 2 rate hikes look more and more likely for the Fed this year.
And a steepening of the yield curve, which I meant to mention earlier, which also more clarity there could be a good thing. Mona, I just wanted to pick up on something you said. So you said for the rally, the broader rally, the market, broadening out like small caps, which are really moving today, to work, you need to actually see those Fed cuts, because some are wondering if it's buy the rumor, sell the fact when it comes to the Fed actually making the move.
Yeah, I think we need to get closer to a Fed rate cutting environment. And clearly we're getting there. Of course, we've gotten 2 back-to-back months of better inflation. As I mentioned, the economy seems to be softening a bit. But in addition to Fed rate cuts happening, keep in mind things like small cap stocks and even more cyclical parts of the market, they're leveraged to economic growth first and foremost. And so if the economy is softening, it's difficult for them to kind of mount a sustainable period of outperformance or rally until we get, the reason that they like to see Fed cuts is because lower rates, lower inflation ultimately means higher consumption and higher earnings growth. And that's the environment we need to get to, or at least start to see, before we can start to see a meaningful rebound in small caps. And so, yes, we're getting closer to rate cuts, but we're also getting an economy that's softening. So until we get the rebound and the reacceleration, that's when those parts of the market start to show real leadership. So we have some time to go, we think, still.